Para continuar con la segunda sesión de este evento, invitamos al señor Diego Mora. Quiero darle la bienvenida al director general de Colombia y Centroamérica de Blackrock, quien será el moderador de este panel titulado Finanzas de transición y su impacto en la gestión de activos. El señor Mora recibió su MBA de la Haas School of Business de la Universidad de California y su licenciatura en Economía de la Universidad de los Andes. Se unió a BlackRock en 2006 como parte del equipo de América Latina en San Francisco. En el año 2008 se trasladó a Brasil, donde su equipo fue responsable de elaborar el plan de negocios de BlackRock para el país. En el año 2012 se mudó a Colombia para abrir la oficina de BlackRock. Quiero saludarlo muy especialmente. Hace 2 días estábamos confirmados de tenerlos aquí de manera presencial. Desafortunadamente, por causas del COVID, hoy nos están acompañando de manera virtual. Muy buenos días, Diego Mora, ¿cómo está?
Muy buenos días a todos en la sala, más de 500 personas reunidas que hoy quisiéramos estar saludando en persona. Un saludo especial a Santiago y a todo el equipo de Asofondos y a todos los equipos de las AFPs en Colombia y obviamente a todos los que están en la sala hoy ahí en Cartagena. I am going to switch to English just to make sure my colleagues don't allow me to lie in front of 500 people today. And I will do a quick introduction of my two colleagues. Today we have Jen O'Neill. She's the global head of corporate strategy at BlackRock. Previously, Jen was the deputy head of investments and transactions within our legal and compliance group. And one of her most interesting roles at BlackRock has been the leadership role she played in the negotiations with the Argentinian government as part of the debt deal in 2020. Jennifer earned a BS degree with honors from the University of Washington in applied mathematics and received a JD degree cum laude from Boston University School of Law. Hola, Jen.
Hola.
And we also have today Mark Whitman. Mark is a senior managing director. He's the head of corporate strategy and the head of the business in Europe, Asia, and Latin America, and a member of our global executive committee. Within the many responsibilities that Mark has in the firm, he leads the Sustainable Task Force with a current focus on financing the transition to a low-carbon economy. He was the head of iShares and index investments from 2011 to 2019. And before joining BlackRock, he was a senior advisor to the Undersecretary for Domestic Finance at the US Treasury and a consultant at McKinsey & Company. He earned an AB degree, Phi Beta Kappa, magna cum laude in social studies from Harvard College, and a JD degree from Yale Law School. That's a lot of Greek, Mark.
Well, buenos dias, and so glad to be with you all. So sorry that we can't be with you in person. Frankly, I'm crushed. I was so looking forward to being with you. Asofondos 23, that's what we're doing.
Excellent. So, Mark, let's get started with a level setting question, if you will. The title of this session is Transition Finance and its Impact on Asset Management. What is transition finance? Why do we care? And why should investors care?
So investors around the world, I think if there's one or two questions that they ask us, one of them will be, how do I position my portfolio for the scenario, the possibility, the probability of the transition to a lower carbon economy? It's up there with inflation and rates in terms of discussion and has been consistently for at least 2 to 3 years everywhere in the world. And so when we talk about transition finance, what we're trying to do is help clients build portfolios that are oriented toward that future. And importantly, it doesn't just mean pure green finance. We do venture capital and growth equity oriented towards ultra green technologies, batteries, hydrogen, but in fact, most of the capital needs that will be needed across the whole world, that companies and governments will need, will be focused more on browner industries becoming less brown. And so broadly, we're trying to help clients figure out how to navigate, drive, and even invent that transition, Diego.
And I think on top of that, Mark, I would say for the Latin America region, with respect to the materiality and the importance that this topic has, we estimate that about 34% of the global carbon emissions are coming from emerging markets, excluding China. So that's a ton, and emerging markets need about $1 trillion more financing every year to achieve net zero by 2050, and that's about 6 times what's being currently invested. So a huge opportunity there too.
Actually, Diego, if I can just add on to that, if you think about where the world needs to invest capital to actually drive the transition, I think emerging markets is a huge category that includes leaders like Colombia, which is a leader in green bonds, in private investments, in thinking about sustainable portfolios and strategies. But there's billions of people living in societies that have much less sophisticated financial systems, that have much less ability to attract global capital. And that's honestly, within a place like Colombia, there are market solutions that can work with government policy. Throughout a lot of the world, there really is no market solution that's going to drive the level of capital we need. It's one of the big challenges that I think we all face.
Excellent. And Jen, let's switch gears a bit. And over the last 2 years, you have been driving BlackRock's efforts to support clients in the move to sustainable. How have your conversations with clients changed over the last couple of years?
Yeah, as Mark just said, the question that we hear most often from clients now is how do they invest in the net zero transition to 2050? 130 trillion of AUM globally have made net zero commitments at this point. It's a global trend, but we certainly see regional differences, particularly across our clients. In Europe, 100% of our largest clients have committed to net zero. In Latin America, our clients are slowly starting their sustainability journeys. And in the US, clients are slow as well, and it's very highly politicized as well. Some numbers for the real economy, which I think are pretty striking. At this point, over 2,000 companies have committed to net zero. Over 450 major banks, asset owners, insurers, and asset managers have committed to net zero. And then, as Mark alluded to, from a public side, from the government's perspective, the share of GDP that's now committed to net zero has gone from less than 10% in 2019 to 95% in 2021. So you really see the momentum. Clients are right up there with that trend. And I think the key change in the conversations with clients over the last 2 years has been very specifically, we used to get asked, why should I care about investing in decarbonization? And now we repeatedly and consistently hear, how can I invest in this decarbonization journey? So I think that really brings it home. Some of the other things that we're hearing from clients now include how do they safeguard their portfolio from physical risk and transition risk. A key one is how do they measure and implement the commitments that they've made? And then something that we'll explore more, but how do they really capture the exposure to the opportunities Mark alluded to around the climate tech of the future, the technologies that are just starting today, and those that haven't been invented yet. So we've really seen a change in the past 2 years from what is this, how am I supposed to think about it, to we're in, how do I think about it, how do I maximize, how do I do this in a way that's best for my portfolio?
That's really interesting, Jen. And I think in the Latin America region, I agree with you that investors in the region are starting some more advanced in the conversations and the analysis and the implementation than others. But in general, I would say in Latin America in 2019, you could have some conversations about sustainability with some investors. Today, basically, almost every meeting does involve at least part of the conversation around sustainability. And the flows in the region, although this is not only transition finance, but rather sustainability in general, just to bring home also the concept of the importance that this is gathering in the region. In Latin America, in March 2020, we had about $500 million of clients' money invested in BlackRock's products geared towards sustainability. Today, the number is over 7 billion. So there's been a dramatic change in only a few years that I think we've seen elsewhere.
Diego,
Yeah,
can I just add to that for just a moment, which is I think this is really important. In the last 2 to 3 years, there's been a transformation in both the financial sector and the real economy. And I think it's worth just highlighting for the group with us today. Uh, um, I have to confess, the team here is trying to get me to pronounce Cartagena properly. I don't do a good job. I'm working on it. The transformation in the financial sector and in the real economy worth noting? And then I'm going to point out a gap. And in the financial sector, we are seeing, as we mentioned, 100% of our clients, for example, in Europe, of our major clients, have actually committed to net zero targets by 2050. Very few of them know how to get there, but they are starting to figure out, putting a lot of attention into how do I change my portfolio today for that future. We're also seeing about half of our flows in Europe are sustainably oriented, and a quarter of our flows globally, which is up 3 to 4 times over the last 2 to 3 years. And when clients are talking about sustainable investing, they don't only mean climate, but the one thing that they do mean consistently everywhere in the world is climate. So it can be other parts, but the climate piece is unifying. And then I'll just say on the real economy side, companies that actually are the people who actually are going to decarbonize the economy. We just provide the capital. We're also seeing that transformation sector by sector, where there are now proper, no science fiction business models for actually being able to decarbonize emissions today, 60, 70% over the next 20 to 30 years with existing business models, existing technology. So there's an enormous amount going on. One thing that isn't happening is government policy is lagging way behind where the private sector is.
And Mark, still with so much evidence, there may be some skeptics. Also, with the increase in oil prices, some may say this is going to reduce the speed at which the world is walking towards a lower transition, a transition towards a low carbon economy. What's your view on that? How do you think this will all affect the net zero transition in the next few years?
I actually think that framing is putting things upside down. If you think there's a credible business case, which there clearly is, for electrical generation, automotive mobility like Tesla, at $50 or $60 a barrel, you'll love the case at $100 a barrel. So what we're seeing around the world is, of course, there's much more interest today in investing in hydrocarbons, specifically in gas, but even in oil, because it turns out it's going to be a long transition, and gas will be with us for a very long time. But I'm hearing two very optimistic things coming in the last 6 months. The first is a consensus forming globally among investors who want to help drive the decarbonization transformation of the world, that gas is going to play a central part of that, and the willingness to put billions and billions of capital against that. And then second, hydrocarbon prices. Again, nothing moves capital and businesses more than prices. And so as we see higher prices coming with the Ukraine crisis, the reassessment across Europe of its dependency on Russian hydrocarbons, part of that will involve more gas, LNG, et cetera, but a lot of it will also involve renewables and new technologies that haven't yet been proven, like, for example, green hydrogen as a business model.
That makes a ton of sense. And Jen, the net zero transition is very well underway, but as mentioned, needs significant more progress to meet the 2050 and the interim targets. How is Blackrock working to help clients invest through this transition? And then, if I may, in particular, it would be interesting to hear your thoughts on what to do with carbon-intensive sectors and companies. Is divestment the right thing to do?
Great questions. So we have had hundreds of conversations with clients, some of you in the room, across the world. We've also had a lot of conversations with corporates that have informed how we think about this. We've done a lot of learning and a lot of listening. And through that, we've come up with a framework that we think is great for helping clients and others like ourselves think about how to really invest through this transition. Some of you may have seen it in the transition finance letter that we sent out earlier this year. It's navigate, drive, invent. So if you think of that as a spectrum, I'll walk through it really briefly. Navigate. What does it mean to navigate? That's incorporating climate risk and transition risk into your portfolio in a fundamental way, just like inflation, just like rates, just like various other factors, and looking at your entire portfolio, the impact of that risk from an investment perspective, and making your investment decisions accordingly. Drive, and this, Diego, is where we get into the carbon intensive sectors as well. So investing in the drive portion of the transition is really investing in the green tech that's here today, renewable energy, wind, solar, hydro to some extent, and these carbon intensive sectors. So jumping into that, as Mark mentioned, this is a transition from brown to green. Many shades of brown, many shades of green. People have thrown in khaki. Somebody came up with olive. So it's truly moving corporates and the real economy across that color spectrum, if you will. We think that divestment today is antithetical to actually reaching a net zero world by 2050. If everybody pulls all the capital today, there's nothing to actually power the world and power the transition, quite literally, to get us there. So we believe that hydrocarbons will play a role in the energy mix go forward. Mark mentioned gas, which we think will be a key transition asset and will be around for a long time. We think there needs to be better differentiation amongst companies in these carbon intensive sectors to understand which ones are transitioning. Many of them will lead. We will see a lot of incumbents. Some of you are in Colombia. We will see a lot of incumbents that are very forward thinking, that are already green, have great decarbonization plans. That's where the capital should go, obviously. But from a capital perspective, we need to invest in these carbon intensive sectors in order to get us to a net zero 2050 world. And then we have the invent category. 30% of the technologies that we need to get to net zero don't exist today. We're already seeing huge efforts at innovation globally that'll increase in this decade and continue to increase across the next few decades. Some of those are starting already: sustainable aviation fuel, green hydrogen. There's also blue. We learned recently about turquoise hydrogen. I think there are more. And direct air capture are some examples. We're also seeing a lot of innovation across the food supply chain, particularly with the Ukraine-Russia crisis, which has put a heavy focus on food security across the world. And we want to help clients both figure out how to differentiate and understand how they can get exposure to what we call the climate tech unicorns of the 2020s, really. So invent's a very exciting category. That's where our venture capital strategies come in. Some of our growth equity strategies will come in again as well. And Diego, just to bring home the point for everyone: framework, navigate, drive, invent. And we think that as clients think about how to get exposure to the transition, it's a good, very simple, but we're trying to make this simple, to make it understandable and actionable way to think about getting exposure across a spectrum of risk.
Can I double click a little bit on the first two? Because I think the third one, invent, is very self-explanatory, right? Yeah. Can you elaborate a little bit more on the first two, on drive and on navigate, and how to differentiate what we're doing, what clients can do, depending on their preferences in these two parts of the framework?
Certainly. And client preferences will always drive, right? So we're looking to understand client preferences, build products accordingly. I think navigate's easiest to understand both from that fundamental risk perspective. So it's kind of business, it should eventually be business as usual. Just as you factor in some macroeconomic risk, you will also factor in climate risk to your portfolio. The key thing there, Diego, is building data and analytical tools to help clients do that. And we're working on that. There are a lot of issues with data, and we're doing what we can to build out certain products. We have a lot in climate, and we've already incorporated what we do have from an analytical perspective into a lot of our index products. We have thematics, we have tilts, etc. So navigate is truly making it an everyday process from an investment perspective when it comes to climate risk. Drive, as mentioned, will be looking harder at those existing climate techs. So renewable energy has been around, I'm sure I'll get this wrong, for at least 25 or 30 years, right? We've been investing in wind, we've been investing in solar. We've seen dramatic increases in the technology there over time. but investing in those technologies that are proven versus those that are not yet proven is where we see drive coming in, as well as that brown to green carbon intensive sectors, right? As the high emission industries like electricity, industry, transportation, as they decarbonize, we will need hydrocarbons in the energy mix. And so understanding where we can place capital to drive that transition for those high emitting sectors from where they are today across a curve to zero at some point from a net emissions basis is where drive comes in. Again, differentiated from the fact that we're not talking about the brand new, exciting, snazzy tech that's to come. We're talking about existing industries. So oil and gas, energy today, and giving them the capital they need to transition will certainly drive that curve downward toward the zero that we're hoping to achieve in 2050.
Very interesting. And you mentioned, Jen, that we are doing this listening tour. I mean, this has been a learning experience for the world, for the market, for certainly us in Blackrock as well. And Mark, it would be interesting to hear from you. You know, we have this podcast, The Bid, and in this podcast, you have done a couple of interviews to companies. This is a series that I recommend to people in the room. It's called The Real Leaders of Net Zero. Could you share some insights that you've gotten from those conversations with those real leaders of net zero?
You're on mute, Mark.
You're on mute, Mark. I'm sure it was very interesting.
The one thing I was told not to do. Sorry. Okay. Over the last year, we've done 2 separate tours around the world, mostly virtual, to understand what's happening with investors, wealth managers, pension plans, insurance companies on the one hand, and then in the real economy. And here's what we found. On the investment side, tremendous interest in net zero strategies, in analytics, in products that can navigate, drive, or invent this net zero world, but a lot of confusion and a lot of uncertainty about how to actually build portfolios today. So that's a huge part of what we're talking about with clients. But when you talk to companies in the real economy, and I'm talking about in automotive, I'm talking about in energy production, I'm talking about construction, shipping, aviation. It's a very different story. In companies all over the world, everywhere from India to the US, what we're seeing is companies finding business models that operate today to reduce carbon emissions 50, 60, 70% without actually inventing any new science fiction. And I'll give you 2 examples that illustrate how this is not about, this isn't about being a climate activist. It's about seeing economic change in front of our eyes. In the United States, the largest electric utility in the world is a firm called NextEra. They run Florida Power and Light, but they also have other assets as well. It's the largest in the world. And today, they produce from renewables, wind or solar, electricity at all in, financing costs included, 2.5 to 3 cents per kilowatt hour. The raw price of gas, just the gas to fire electricity, will be 3.5 cents up to 6 cents today. That shows you why renewables in parts of the world that have lots of sunshine or lots of wind are actually already disrupting traditional technologies. In construction, we're finding that actually we all think about buildings as having concrete pillars, big concrete pillars. Actually, that's a pretty inefficient way of building. You can reduce the amount of carbon used inside of a building and not increase the cost simply by using a different shape that's designed more like a dinosaur bone. You use recycled concrete, easy to get, and you use a mix of other structural materials to reduce the carbon intensity of cement, which is unavoidably carbon emitting. Put all that together, these technological changes with buyer preferences, both middlemen and ultimate consumers. Middlemen today, for like an Amazon, for example, or a Walmart, are insisting that their suppliers reduce their carbon footprint over time. And more, we're going to see individuals looking at the carbon content of the things that they buy. Put all this together, and you see a revolution happening even without government policy. And that's the opportunity what we want to help our clients navigate.
That's very interesting, Mark. And maybe, Jen, I was just notified we have 5 minutes. So in order to allow Mark for a last few minutes, why don't you share with us how we engage actually with companies in the real world that are, part of the portfolios, most of them index portfolios, through this transition?
Yeah. So BlackRock's a long-term investor, and we're a fiduciary to our clients. Our investment stewardship team engages with corporates around the world across sectors and industries on that basis. They cover, as imaginable, a bunch of different topics: climate risk, transition risk, sustainability on the broader level, forefront these days, understandably. We ask companies to disclose specifically their ESG data as well as their decarbonization plans. We ask them to set short, medium, and long-term targets that articulate their greenhouse gas emissions reduction plans. And then I think ultimately, Diego, what's most important underlying all of this is the accountability factor. And for BlackRock, that comes in our vote. So if we can have all the conversations in the world, but if the companies aren't actioning what they're talking to us about, or if they're ultimately not hitting the goals and targets that they're setting for reasons that are, not otherwise explainable, then we use our vote when it comes to nominating directors to make our position on this issue very clear. But I do think it's important to understand that it's an ongoing dialogue. We recognize the challenges, and we are definitely pushing companies through both disclosure, accountability, and also the way that they set these targets to focus on de-risking and to focus on transitioning through the transition to 2050 with net zero. So it's an ongoing process, but we certainly engage with them and try to guide as much as we steer.
Excellent. And Mark, the last few minutes for you, what are the biggest challenges that clients are facing globally as they look to invest in the transition? How is BlackRock helping? And any closing remarks from your side after that?
Right. The two biggest challenges that clients everywhere have is how do I build my overall portfolio to position for this net zero future, which is not certain. How do I build a portfolio that is ready for that, but then also captures opportunities along the way, especially around hydrocarbons? That's the number one. And how do I even understand the carbon intensity of a given company? And is high carbon footprint or low carbon footprint really even the right question? Or should I be thinking about the forward trajectory of those emissions? So those are all pretty fundamental questions. And I would say most clients, almost all clients, are looking for a lot of help in how to actually answer them. The second one is, what do I do about brown industries today? Many of our clients do not want to invest in fossil fuels at all, and that's fine. It's their money. But as a systemic solution, simply starving those companies in brown industries of capital in the public markets means they will simply go private and disappear from public view. So how can investors, this is the second
inversionistas, esta es la segunda pregunta que tenemos. ¿Cómo un inversionista quiere navegar, impulsar y inventar esa transición? ¿Qué puedo hacer yo? ¿Cómo puedo participar en estas industrias cafés? Y realmente no hay una vía completa, no hay unas herramientas que uno pueda comprar para ver qué empresas en el sector petróleo y gas están más hacia la transición y cuáles no. No hay un objetivo basado en la ciencia en petróleo y gas. Esta es la segunda brecha en la que estamos trabajando. No tenemos respuestas, pero estamos construyendo capacidades propietarias para poder resolver eso. Quiero decir un par de cosas aquí, Diego. Diego, muchas gracias por reunirnos y quiero agradecer a todos los que están allí en la sala de conferencias por unirse a nosotros. Realmente nos sentimos no estar, creo que ustedes no querrían que nosotros estuviéramos allí. Estuvimos en Bogotá ayer, pero quiero agradecer a todos en Colombia por permitirnos estar allí. Después de estar 10 años en el país, esto ha sido un arranque muy bueno con el liderazgo de Diego y esperamos tener más décadas con ustedes en el futuro. Conéctense con nosotros. Nos gustaría poder hablar con ustedes y con sus clientes, con su junta, para poder ayudar a ver cuáles son las oportunidades y los riesgos en esta transición. Y les quería dar las gracias nuevamente.